What is up, YouTube? Welcome back to Stocks by the Numbers, and today I'm taking a quick look here at Ambarella Inc, ticker symbol AMBA, listed here on the NASDAQ. As we can see, the stock just closed here at about 69.5. We have a year low of 60.5, year high north of 2.25, and in my opinion, I do like the company long term. We could see some short-term volatility here, perhaps even some stagnation over the next 6-9 months. But overall, I do like the stock. And here, I just want to show you guys a couple of numbers and a couple of technicals here. And here we're looking at a market cap of touch below 2.7 billion. And if we come down here annually, you can see that they brought in about 332 million. It's looking like, excuse me, for the year. So they're trading what, like 7.5, 8 times total revenue, which I do mention could be at times a little bit overvalued. However, it is a tech company, semiconductor company, and they do consistently beat earnings. So you could say that a 7.5, 8 times total revenue ratio is justified here in this scenario. Switching over here quarterly, you can see that the company did go net income positive here October 2021. They've plateaued here at about this $90 million revenue, dropped down to 80.8 million recently, but you can see that the net income has been just increasing on the negative side, which of course is a slight red flag here. So if we switch over here, I just wanted to show you guys here, this is a 1-year chart, and as you can see, we have a potential double bottom here. And if we back up here to a few earnings reports a few quarters ago, you can see a gap up and a gap down here. So you have a potential gap fill here of about 115 for all my short-term traders here, going off to double bottom, potentially filling the gap right here. So that could be a potential trade moving forward here in the next couple of weeks or maybe month or two. But long term, this is like a lifetime chart here that I just backed up. And you can see that, this long-term support trend line, it has broke recently, but again, double bottom and has reclaimed back above that trend line where it currently sits now. That's the top. And basically, overall, you can say that the company is growing and is basically in an uptrend. And again, on the bottom of the screen, you can see multiple greens, multiple earnings beats. So the company, somehow, some way, is just slightly coming in above what analysts are expecting and is basically continuing in this slight uptrend. However, getting back to $200 a share is a little bit astronomical, but in the short term, again, potential gap fill and then pulling back to long-term support here in the 80s potentially. I do see that as a very strong possibility. However, the EPSs have been dropping, and as we see here quarterly, again, revenue has kind of plateaued here at about 90 and dropped down to 80 in the most recent quarter, but it's the profit margins that are taking hits. Now, even on TradingView, it shows you that they feel it's a strong buy with a much higher price target than where it's currently trading, and that's why in the long term, I do really overall agree with that sentiment. However, if we look at the financials, if I can find them, here we are. So we go to the financials here, and this is what I wanted to show you guys, right? When I talk about a company coming back down to earth and potentially trading flat for several months before it's viewed as undervalued again and takes another leg higher, this is potentially what we could be looking at here with AMBA. So you're seeing here they forecast that the EPS is really going to start growing here, especially going into 2024 and 2025, and even over quarterly. Basically, a little less than a double, but you're seeing some good moves here. Again, these are estimates, these are forecasts, but we come down here to the revenue going from 330 million, and they're estimating jumps to 340, 406, 510. Look at this, over $500 million by 2024, 2025. And this is what I'm saying, like, it might suck if you purchase this stock now and it remains flat for the next 12 to 18 months. Right? That would kind of suck. But at the same time, if the company is coming back down to earth and readjusting its ratios and its profitability percentages before it takes another leg higher, you could really see something beautiful happen here. Because here, let's just say the ball drops here at 2024 and the stock is exactly where it is now at 69.5. All the numbers remain the same. Now the stock is trading like 4.5 times total revenue, and it could be viewed as tremendously undervalued. Plus, if the company is potentially able to bring the company back into net income positive quarter over quarter, you're really going to see an explosion here. And even if we trade, 8 times total revenue, like it's roughly trading at right now, off 510 million, you're talking at over $4 billion market cap. Now the market cap is only 2.6, right? So if you had to hold this going into 2024, but I'm telling you that the market cap is going to go from 2.6 billion to 4 billion, I mean, that's just about a 50% increase. So yeah, that kind of makes sense. I mean, I would give it a little bit more than 1 year. I know they had the 1 year price target of about 104, but yeah, I'd say, yeah, probably by 2024, you're more than likely, I'm about 90% confident in saying that you're probably going to see a stock trading well over $100 a share, and it's going to be justified, right? It's not going to be viewed as overvalued at this point because they have the revenue to back it up. But I wanted to switch over here just quickly before I let you guys go, because the price to sales ratio, again, you can see this is going back to 2015 starting all the way to current. So if we look at, just some historical numbers of the stock here, you can see the price to sales ratio about 4.25 jumps up to the fives, high fives. Then it has a big explosion here. Obviously, pandemic, a lot of stimulus money came in. A lot of young investors just made it their business to just purchase tech companies across the board, right? Because if everything was shut down and then there were supply chain issues, right, companies like this shouldn't have exploded, but they did. And this stock went up, as we saw, to $227 a share, or whatever the 52-week high was. But now you can see the price to sales back below 8, right? So still technically could be viewed as historically high pre-pandemic, but at the same time just coming back down to earth. So that's why, if the stock does pull back slightly, a handful of dollars here from this level, it could be justified. However, we are potentially seeing the U-turn starting to happen soon here with these numbers becoming a little bit more realistic and coming back down to really where they were historically. Price to cash flow ratio, same thing happening. You had big explosions up here to about 50, well over 100. Now it pulled back to 41, right? So again, could potentially come back lower here, but at the same time has been higher and could potentially see a U-turn soon from these levels. Price to book ratio, same thing. Maintaining about 3.5, sub 3, 4.5, and then an explosion up to 7 and 9.5. Now we're back down to sub 5, right? So this is what I'm saying. When companies have these overinflated ratios and percentages like this, and then they slowly start to come back down to earth, that is when, excuse me, talking too much today, but that is when you will see a company potentially stagnate in stock price for potentially 3 or 6 months straight before you see that next leg higher and that real explosion happen in the future, right? Sometimes they just need to regulate themselves, really, And coming back down here, I just wanted to show you the profitability ratios here, and then we'll call it quits. But see the return on assets, as you can see back in 2015, very healthy, above 20%, slowly decreasing over the years, getting to negative double digits, making a nice U-turn to about minus 4.25%, right? Showing the silver lining on the cloud hovering over the stock, and then boom, now currently we're sitting at minus 6.7%. So it's only 2 percentage points, and to people like yourself and myself, it might not be viewed as a big negative. However, there's about a 50% move. And that's what a lot of analysts look at. They look at the percentage moves of these profitabilities and of the revenue and the earnings coming in year over year, quarter over quarter. So that's why some of these, they could be, it could be an overreaction when they mention some of these numbers, but at the same time, like I said, consistent decreases and then showing the light at the end of the tunnel, but then pulling back again. That's what kind of pisses off analysts and investors, really, for lack of better words. But here, the return on equity, you're seeing the same thing. Slight decreases, goes to negative double digits, minus 5%, back down to minus 8%, Return on invested capital, same story, drops down to negative double digits, minus 5%, back up to minus 8%. The gross margin percentage has actually been maintaining this level over the years, so that isn't a red flag at all. But the operating margin percentage, as you can see, dropping, taking big hits down to as low as about minus 27.5%, making a huge rebound here to less than minus 8%. Now it's back down to minus 25%, right? So these are big moves. This is why the stock has been selling off. And, this is basically what's been going on with Snapchat, which I did in my most recent video. So, you might be experiencing a little bit of deja vu here like I am. But either way, we're moving forward here. EBITDA, earnings before interest, taxes, depreciation, amortization, we're slowly selling off here, minus 22%, making a huge rebound to only minus 3.5%, back down to minus 19%. Net margin percentage, selling off, big negatives here, as low as almost minus 27%, jumps back up to less than minus 8%, now currently sitting at minus 29.25%, the lowest it has been since 2015 here that we're looking at. So, as you can see, again, these are the reasons why, in my opinion, this company has been taking huge hits from those highs and has been testing these support levels and these fib levels. But again, if we zoom in, you can see potential gap fills here of about 115 and change, coming off a potential double bottom, even though it's not exact to the cent. You could say that, we had some gaps down. We do have the double bottom, so we could reclaim back up to 80 and potentially even higher to 115. Again, in my opinion, that would be in the short term. But in the long term, to reiterate again, we do have a lot of earnings beats quarter over quarter. We do have an overall uptrend, and they do make semiconductors, and they're in sensors and cameras and automotives. So you could really see over the years a company like Ambarella start to really grow its revenues. And what you really need to see from this company here is, again, in my opinion, it's probably going to slowly maintain this level. Again, in the short term, it might reclaim the gap to 115, but I think it's just going to chill along this bottom support line here, because what this company needs is 1 and really 2, 3 consecutive quarters of going net income positive. And if this company can do that, then you will probably see the overall bullish reaction coming from Wall Street and investors, and you're going to see this thing more than likely jump back up to this 150 and potentially even $200 level in the long term. So short term, it could get volatile, could get rocky, potentially pulling back here into the 50s. But again, we have a double bottom and a gap fill, so it might be bullish here in the short term. In the long term, again, it could pull back into the 50s, and that would suck if you start piecing yourself in here at around 70 a share. But if we like it at 69.5, we're going to love it at 49.5 here at this level, right, guys? So, definitely might not be the worst time to start piecing yourself in. However, do be aware of the upcoming volatility that could potentially hit the share price. But overall, as a company long term, me personally, I do like Ambarella. I do like what they're doing. I do like all these green beats. I do like this overall uptrend. And I think they just have to turn around the profitability and smoothen out any rough edges that they have over there at the company. And I think this could be a really big winner, especially long term, moving into 2025, 6, 7, if they stay on the track they're on. So I just wanted to bring this company to your attention, show you guys a few metrics, because it might be something that might be flying underneath your radar that you might not be familiar with. So I'll end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, please give it a thumbs up. Helps out the algorithm, helps get a few more eyes on the channel. If you appreciate the videos I'm putting out, do me a favor, push the subscribe button. Obviously, personally, that means a lot to me, just seeing the community grow. If you have any questions, comments, or concerns, leave it down in the comments section. I'm usually very quick to reply, get a little back and forth going down there. And moving forward, like I always say, I do know that markets are rocky, markets are volatile and uncertain. So I do wish everyone success. I hope everyone makes a couple of dollars. I'll see you guys in the next video. Have a good day.